Hey, welcome to my YouTube channel Money Life Invest. And today I'm going to talk to you about how to create an investment portfolio if you are in US or in Canada. And to give you a background, I have made a video on what is an investment portfolio. So if you're really new to this channel, if you don't know, please check out my other video and please subscribe and hit that like button, and that will get this video to more audience. And as my goal is to reach many people who are in need of understanding financial concepts, so really appreciate it. So with that, let's get started. So how to create an investment portfolio for beginners in US and Canada. So first of all, we want to understand what is asset allocation is all about. So there are three key things when it comes to asset allocation. Uh, Basically, asset allocation is nothing but there are the money that you want to invest on various investment vehicles. Let it put that way. That's the asset, and how you want to allocate, like how much percentage you want to allocate to one investment vehicle versus other, right? So there are three key concept when it comes to asset allocations are concerned. So the first one is, you want, when you construct your investment portfolio, you want to make it you want to have a diversified assets. So what is diversified asset? You can have uh, within a portfolio, you can put, let's say you have $100, you can put, let's say, $50 on stocks, and maybe $20 on bonds, and $10 on a savings account. So it really depends. So that's the asset allocation, right? So basically, you have an X number of like X money, and then you want how you want to divide that money and allocate to each of these investment vehicles. So there are many investment vehicles you have. We have stocks, bonds. So in bonds, you can have um, government bonds, municipal bonds, or corporate bonds, right? Real estate, you can buy the actual real estate, or you can buy it as a REITs. So in real estate, you can buy like commercial one, or residential properties, or lands, right? And then you can buy certificate deposits. Pretty much it's like you give a money to the borrower at a specified coupon rate or interest rate, right? So but you need to keep that keep that money for a certain period of time, and then upon maturity you will be given that interest rate. So uh, there are various flavors out of it. This video is not about what these specific investment vehicles are about, but just to give you an understanding, that's certificate of deposit, right? You can also invest your money in commodities like gold or oil or silver, or corn, soybean, like anything, right? Or you can put some money into crypto assets. You're a young person, or just like you're a person who are intrigued by new technologies, you want to try, yes, you can also invest in crypto. Or you're a very conservative person, you don't want to try anything, you just want to keep your money in the high interest savings account because you don't know about any of these, so you want to play safe. It's completely up to you. So that's the choice. So these are different investment vehicles out there. And the purpose of the asset allocation, that basically in your investment portfolio, you want to invest in various investment vehicles, but the main key point is to diversify as much as possible. Like you can put, like, you split the money into you know, percentage, whichever percentage that you are comfortable, and you invest accordingly. We will get to how do you construct that portfolio in a shorter. But first, you want to understand what is asset allocation means, right? Asset allocation means you have money that you want to invest on various investment vehicles. So, but the key point in asset allocation is to diversify. The second key point is to invest in an uncorrelated asset. So for uncorrelated assets, typically, if you think about it, stock market versus, you know, um, real estate or gold, uh, they are typically not correlated. So therefore, if one investment vehicle has to go down in value, the other hopefully, because for example, if you have two investment vehicle, one is the stock, the other is the gold. And if let's say the stock market is crashing, naturally people will go and park their vehicle in the safest in investment vehicles such as gold. So naturally the value of your gold will will kind of offset, may not be completely offsetting the stock market, but it won't lose value. That way it provides some sort of a stability to your portfolio. So so the second key point is typically you should have uncorrelated assets with low or negative correlation, right? So the negative, that's exactly I described right now. And then finally, you want to invest based on your risk profile. The main objective is to maximize the return, but you want to invest based on your risk tolerance too. So i- so based on your the main objective for anybody is, when it comes to investing, is to maximize the return, but it has to come with some sort of a risk tolerance, right? And how much are you willing to bear? That also plays a key factor. And I've heard people talking about age and whatnot. Sometimes it is a factor, but I think the but I wouldn't say that is the key, but we'll get to that. So just to summarize, asset allocation is basically how you want to go about investing your money into various asset. And there are three key salient points when it comes to asset allocation: is you want to be diversified as possible, you want to invest in uncorrelated asset with low or negative correlation, and then finally you want to maximize the return, but it has to be based on your risk tolerance. So these are the